Hi, my name is Terry Holman. I'm the president of Holman Financial Solutions. First thing I would like to do is thank you so much for taking time out of your busy schedule to join us for this series on financial planning and tax planning strategies for the high income earner. Now, anytime I ever go to any kind of workshop, one of the things that I always want to know is a little bit about the speaker and what gives them the right to, and the credentials to speak to us. Well, that's what I've shown you right here. I came in the business in 1979. I've been in the business for 37 plus years. And I am a believer in education. I think the more that I can educate my clients, the better clients they become, and the more that I can do with them as far as letting them make their own decisions by having all the information. And to do that, I've just shown you a few things here. This is back in one of the articles in 1987. I was written up in the front cover of the business section of the paper. Again in 92, 1999. I've been written up several times, talk radio, but they all have one thing in common. The one thing in common is that they're all about education. They're all about taking the client and educating him and teaching him about what the strategy is that I would like to implement. What I'd like to do now is talk to you a little bit about what our clients look like. Our clients right now for these are high income earners like yourself. That's why you're looking at this video. And they usually have an income of a minimum of $200,000 up to several million. And what we do is our program, just to qualify, has to have a $200,000 minimum taxable income. And the reason for that, that's where the program works. And you'll see as I go through the program how that it works. And at $200,000, we know, it's not a guess, we just know based off all the years that we've done, we can generate you at least a $10,000 tax savings. Again, at $1 million, the more income you have, the greater the savings. And at $1 million, if you're state and federal in Georgia, I can save you over $100,000 in taxes. So what I want to do now is start the program. And what I want to do is talk to you a little bit about what we're going to be talking about. Now here's what I'd like for you to do for me, if you would. Today I'm going to be kind of like a fire hydrant that you're trying to drink water out of. I'm going to give you a ton of information about a program that you've never seen or heard about. So here's what I'd like for you to do. Again, I approach this as education. So what I'd like for you to do is get you a pad and pencil next to you, because here's what I want you to do. I want you to learn. I want you to get comfortable. And everything that I'm going to give to you, I want you to research. I want you to check us out, because once I can get you to do that, then I can help you. Now what we're going to cover in this course is we're going to talk about what a land conservation easement program is. We're going to talk about the tax benefits. We're going to talk about what the program looks like, and we're going to go through some tax returns to help you. So that's what we're going to cover. So I'd like to go ahead and get started. What I wanted to do, like I said, is show you what a deal looks like. Okay, right here, this is one of our deals that we did in 2016. This is in an area called Lake Oconee in Georgia, and if you've never been around this area, it's just beautiful. And this deal that we did here was a deal where we raised over $8 million, and for that it created a $37 million tax deduction. Now in this slide right here, what I'm trying to show you is what this property looks like. As you can see, it's on Lake Oconee. This thing very easily could have been developed into a subdivision and would have tremendous value. And remember, what I want to do is show you how that we end up working to get a tax deduction. Now, as you can see, I want you to see, it's beautiful property. We first are a land conservation easement company. That's what we do. And we love taking these pieces of property and being able to preserve them, for our kids and grandkids, and now my great-grandkids probably, somewhere down the road, is that we love doing this. Now, for that, in preserving this property, one of the side benefits that we get is that the government gives us a tax deduction. And so that's what we're going to be talking about, but I want you to understand where our primary thing is preserving the property. Now, the next thing I want to do is I need to explain to you what a deal looks like. And if that does, again, I've found over time that if I can work you through this flow chart, then it starts making a little bit more sense. All right, here's what you have. The property I was just showing, you have a family that owned this property, and they decided that they didn't want to develop it, that they again wanted to put it into a land conservation easement program and preserve it forever. So people could use it, their kids could use it, grandkids could use it. So what happens is now they've decided to do that. Well, the next phase that they do is that they're getting ready to give it away, but they're going to give it into a charitable trust, which I'll explain to you later, is that, but first, before you give anything away, you have to know what the value of it is. That's where an appraiser comes in. I'm going to spend a lot of time about the appraiser in a few minutes, and make sure you understand the importance of the appraisal in this process. So now they go out there, and the appraiser, which has to be a qualified appraiser that deals in this, it cannot be the local guy that, you know, all he does is appraise residential real estate. And there's a lot of rules in what we have to do, which we've been doing for over a decade. So now he brings in the appraiser, and the appraiser then comes in and says, okay, now that this property has a certain value, and they go into a qualified land trust, which is the company that basically manages the property. They're the ones that he is a 501c3, again, just no different than your church. And again, I'm going to go through the tax codes in just a minute. And so it allows them to give it away. And for that, because they've given away to this land trust to oversee and to manage, is that they now get a deduction. Again, if I use the deal that we just did in the Lake Oconee, what you'll see is that we created a $37 million deduction. Now they've given away the property, and now what they're going to do is they want to share some of that $37 million worth of tax deduction. So they invite people like you to become members in the LLC. And so what happens is now they've invited you in, and what the members have decided to do, and the owner, is okay, we're going to share in the tax benefits. Well, that number today that we use, the ultra-conservative number, is it's for every dollar you give us, or every $10,000 you give us, you get a $44,000 tax deduction. Now, if you give us $100,000, you're going to get a $440,000 tax deduction. And I had a gentleman in December that gave me $500,000, and we created a $2 million plus tax deduction for him. So that's how it works. We are now members, and whatever you put in, you now proportionally owe those shares. So now that creates us the tax deduction. Now what happens is at the end of the year, what happens is that the partnership, the LLC, comes in and says, okay, what we're going to do is that now by, let's say, first or second week of March, is what we're going to do is send you what is called a K-1. And also with the K-1, we're going to send you a copy of the appraisal. And all of that is done which helps you to be filed with your taxes. And again, when we get to a little bit deeper in there, especially in the frequently asked questions, I'll go into that a little bit more. Now, this is my favorite slide, because what happens is that from here, now we've saved you $10,000 to $100,000. To one client, we saved over $1 million in taxes. And you're going to have a lot of things that you might want to do with it. Now, I like the one in here about college, because the one I just did not too long ago, is that he had 2 boys in college at very expensive colleges, and their premium together was over $100,000. And so what he did is by doing this program, is that what he was able to do was to save not the whole 100, but he was able to save about $85,000 in taxes. Now he's tickled to death, because that's $85,000 that we are now using to put into his financial plan. And what we're finding, by adding that back to their budget and their retirement plan, he's going to be able to retire a little bit earlier than he thought. As you can see right here, that I have given you a lot of information in a short period of time. And what I want to do, remember I'd ask you to get a pad and pencil so as that you could write down any questions. So what I'd like for you to do right now is, if you want to, just stop this for a half a second and then write down any questions, because what we're going to give you at the end of this video is we're going to give you a link that you can go in and write in any questions that you want, and then we'll get back with you within 24 hours of a working week. Now, what I want to talk about now, the tax codes. And I want to talk about the tax codes because more than likely you've never heard of this program. And what I want to do is, I've showed you how the deal flows. Now I got to show you how it qualifies for the tax deduction. So the first thing that we have right here is under the allowance of deductions. It has to do with there shall be allowed as a deduction any charitable contribution. Now, where did you hear that before? Where you heard that before was when we were talking about the Qualified Land Trust is a charitable organization qualified as a 501c3. Now, in here what you have, we're going back, what is a 501c3, just to help you understand a little bit, is a church, convention, associations, it is any educational organization, medical hospitals, basically anything that is a non-profit organization will qualify most of the time as a 501c3. All right, now the next section is called Section E, which has to do with a qualified conservation easement. Now, what I want you to see here is that it, in general, any qualified conservation contribution. Now, that's what we just talked about, is that it was given, we have to have the appraisal, so that makes it qualified. Now, you see another number in here called 50%. You are allowed in a charitable contribution to take 50% of your adjusted gross income. Now, I'm going to cover that a little bit later, but let me give you a little example. If your income is $1 million and before any deductions, the IRS says that you can give away your whole $1 million to the church, but we're only going to allow you to have 50% of that, or $500,000, as your contribution that you can deduct that year. That's what it's talking about. Again, I'm going to go into more detail of this on the third video, because that is key to our program. Also in here, down at the bottom, what I have done is that you have a carryover. So let's assume we do overfund this thing and we create more deductions. And let's, in the scenario here, is that in September, October, November, you decide to go ahead and fund this, and you expect an X amount of dollars come in. So we fund that to make sure we maximize the deduction, and all of a sudden that commission check you thought was going to come in December didn't come in until January. Well, now you've sort of overfunded, but don't worry about it, because what happens is that we are now able to do a carryover for the next 15 years. One of the purposes, or what we say in here, the conservation purpose defined, is very simple. It's like I was telling you when I was showing you Lake Oconee deal. It has to be a deal that comes in here, and it is the preservation of land areas for outdoor recreation, education, the general public, protecting fish, wildlife, plants, open spaces, all those kind of things is what we have to do. And I showed you the Lake Oconee and how pretty that was. People are going to be able to use that, get down to the lake. But another deal that we did that I like was up in Chattanooga, Tennessee. If you've ever been to Chattanooga and you're going through outside, coming out of Chattanooga, there's a beautiful river. It's got a big long curve. Well, right to the left there's a big old mountain. Well, we were able to preserve part of that and put it into a land conservation easement. Please, again, let me say one more time, we are primarily a land conservation company that it just happens so that we have some tax benefits that go along with it. Now, remember, I've mentioned this 2 or 3 times about a qualified appraiser. Here it is in the tax code. This is key. In here, it must be a qualified, recognized professional appraiser organization. It can't be the one, the next door neighbor that appraises residential property and tackles this. And I told you I'd tell you the good and the bad of all deals. And in here, we've been doing this for over 10 years, 60 deals. We've never had a problem, never been audited. But if you go out there and look, and if you look at some deal that got in a little bit of trouble, what happens, the deduction is never challenged. I mean, that you can deduct it. What is challenged sometimes is the appraiser, and see if it was an appraisal done in the proper way. So they may have given you a $10 million appraisal and the IRS says, no, it was only worth 6. So there's never a question about the deduction is what I want you to get out of this. But that's why we use and we emphasize that we have to have top quality appraisers. Now, again, at the end of this video, you're going to have, again, an opportunity to ask any questions. If you would like to see one of our current deals, all you need to do is do that and put that you'd like to see our current deal. And then again, what I want you to look at and I want you to investigate and I want you to research, I want you to call and ask questions, is you will see our appraisal organization, our CPAs and attorneys. Because the bottom line is this, I want you to be comfortable with us, and once I can get you to do the research, we have found that 99% of the time that people invest with us and help us with our land conservation program. Again, thank you so much for your time. Again, we're going to have a second video. Again, don't forget down below is a place for you to send us questions. And what we're going to do, as soon as we finish this video, one of my assistants will then shoot you out this second video for us to go through. And what we're going to do in that section is I'm going to go through frequently asked questions. The reason I do that is you've got a lot of questions here. In this, we found that this will answer about 95% of your questions. Again, thank you so much for your time, and I look forward to meeting you at the next video. Thank you.